Hey there guys, Andrew Baxter here, and welcome to this week's update in terms of trading in markets through andrewbaxter.com.au. Interesting week for the world's largest company by market capitalization, and that's a good friend in Palo Alto, Apple. Apple came out this week with its earnings, and it also came out with a second milestone, one that truly deserves a few moments of reflection and understanding. And that's the fact that the company sold 1 billion units of its iPhone. Now that is truly staggering, and when you compare that to the performance of most stocks in the technology sector that manufacture widgets, there are very few companies in the world that could claim to have actually sold 1 billion units of their product. Obviously McDonald's is probably something that can do that with burgers, I don't know. But the reality is it's an incredible milestone. And in the midst of the furore that comes with such a huge number, we also saw the Apple results come out this week. And whilst earnings were a little on the flat side, and in fact, looking at iPhone sales in particular, they were on the decline for the second quarter in a row. One of the big question marks as a trader that we look at is where to next for that particular stock. Now, clearly, the share price responded well to the results announcement, jumping up from around $97 to about $107 in the space of one trading session. Big jump, quite beneficial for holders of the stock, myself included. I hold it personally as well as in our hedge fund. And I guess that kind of boost in the stock is always attractive as a holder, but we look at stocks today for what they can do in the future. What's particularly interesting when looking at the Apple stock is the implied volatility. And as someone that trades options extensively, implied volatility is something I follow very, very closely. Now, the implied volatility is declining on Apple and has done over the last number of trading sessions. And what that means by implication is for trading an option, say a covered call, for example, with a lower level of implied volatility, the actual premium available to you for selling your call options is getting relatively lower because volatility is a big component in the price of an option. So that then calls into question, where is the risk on the stock? And here's a stock which is the largest company in the world that has sold 1 billion units in its flagship product. Yet I would suggest from an analytical point of view and a trader's perspective, there's arguably more risk in the business now than what there was at the return, say, of Steve Jobs taking over the helm when the company was really in dire straits. Because Apple has a huge amount of cash at its disposal. It needs to do something very wise with that in terms of an acquisition perhaps, and this has been touted around the market for quite some time now. And alternatively, in terms of being able to propel its growth and get that growth level back up to what investors expect, it may well need to launch, and it needs to launch a winning product. Now, while sales of the hand units on the iPhones may be moving into new markets like China or India, for example, the profit margin in those markets, given different pricing points, is lower, and that impact on margin is what affects the earnings within the business. So it's in an interesting position. I've been holding the stock for a while. I'm looking forward to selling more calls. Mine have just rolled off and generating more income from doing that. But I think some close scrutiny for the future moves of the business are a very, very important part of my trading strategy when it comes to trading Apple Computer. So if you're a holder of the stock or you're looking at holding the stock, understand that there is a little more risk because the expectations are just so high with a business like Apple. It needs to deliver always. And when those deliverables or the expectations of the market aren't met, that share price does get punished and gets punished hard. I guess that's the problem when you're the biggest kid in the playground. Everyone's got their eye on you, and that's certainly the case there with Apple. So be very mindful of the fact that a little less compensation through that fall in IV and risk on in the stock in terms of where is the future earnings growth coming from. Meantime, love the stock, love the products. Got an office and trading floor full of the products, have a house full of the products. They're easy to use, maybe overpriced, which helps with Apple's margin, but they just get the job done. In fact, this is being recorded on an Apple product too. But will that flexion point come fairly shortly where that slowing down of growth and earnings prompts investors to take money from that large business and put them into perhaps lower risk, lower growth potential opportunities in the marketplace? I guess time will tell. You want to see how we do that? Feel free to contact us through the blog, andrewbaxter.com.au, or at Australian Investment Education. Like us on Facebook, share this, or if you've got questions, feel free to float them in and we'd be delighted to help you with that. Use this as an income opportunity though, because it is there now, and sometimes those opportunities don't stick around for a long time. Nice bump up in the stock, great time to be selling calls, certainly what I'm looking to do right now, and I hope we can assist you in the same. So Apple, is it losing its gleam? I don't know. It's in my portfolio, trading it now. Let's see what happens over the next month. Catch you then.